So there are other reasons why I might be sort of thinking that crude oil won't drop. And there's a difference between me thinking crude oil is going up, in which case maybe I'll just buy futures, and not dropping. Okay, if I just buy crude futures, well, if they go up, I make money. If they go down, I make money tick by tick by tick. But if I think if I think crude oil won't drop, that's a little bit different way of looking at it. I don't think crude oil is going to drop very much. It may not go up, but if I sell the 71.72 put spread, let's go back to the Analyze page. Where do I make money? Well, I make money so long as the thing stays above 71.60. Right now, it's trading where? At about 70. No, or is it? Yeah, about 74.50 or so. Okay. It can drop a couple of dollars. If I bought a future, I'd be losing money. Now, if it rallies, sure, crude oil outperforms it like crazy. Okay, outperforms a short put spread. If we go up $10, all I can make is 34 cents on this vertical, as opposed to potentially many points on a long future. But my margin is lower. My margin requirement is going to be lower than if I bought a future. My risk is much lower. Okay, if we drop, yeah, if we, I can lose a huge amount of money on futures. Okay, if I just bought futures. So what I'm saying is, I have a little bit of room for error here. I can be wrong. I can still make money. I think crude oil is going to go higher. I think it's not going to drop, but it does drop. It goes down to 74, 73, 72, and I can still make money on this trade. And I use that, and I use the probability numbers to inform that. So I'm going to say, there's about a 60% chance that crude oil won't drop below 72. And what's telling me that? The marketplace is telling me that. This option, and really wide bid ask because it's closed, but we're looking at it on Saturday morning. But the marketplace is pushing the value of that option around, the buying and the selling. That buy-sell activity is changing the implied volatility. More, if there's heavy demand for something, the price goes up, the implied volatility goes up. If there's low demand for something, the price comes down, implied volatility comes down. When the implied volatility goes up, the probability number goes up as well. So higher probability or higher volatility means there's going to be a greater chance for that 72 put to be in the money. Okay? So the buying and selling pressure is affecting this number specifically, and also more broadly, this number here. Okay? When the wings get bought up, when people are buying insurance by buying those out-of-the-money puts or buying the out-of-the-money calls as insurance, whether it's for a crude oil position or for an S&P position or whatever, or an IBM position, then the values of the options go up, and that volatility index number goes up. So the question is, which is right, which is better? Well, the overall number is a pretty good estimate. Is it perfect? No. When did it fail? Well, it failed in 2008. Okay. I'll tell you right now, the probabilities that in late September of 2008 were looking pretty sweet. Not a chance. The probability that the S&P is going to drop as much as they did, 3% or whatever it was, And who sold those puts? Well, I sold a few. I wasn't massively short them. But yeah, the probabilities were so low, it's never going to get down there. Well, it did. Okay, it did. So these probability numbers are just a tool. This is a pretty good estimate, the 35%. Is it so dramatically different from 35.37? No, not really. The same things influence these numbers. These volatility numbers are all changed by market activity. So I wouldn't say one is better or worse. It's more important to understand where those numbers are coming from and interpreting them as such. So the Analyze page, sure. Let's go back here. 75% chance of making, no, this is wrong because we have the wrong date in here. Okay. Let's go back. March 18th, 62%. That basically comply or conforms to what we thought was going to happen on the trade page, about a 61%. It also conforms kind of to an analysis by saying, $66 divided by 100 is about 66%, pretty close. trading like this isn't done with surgical precision. You're not trading, arbitrage here, where you got to get it down to the fraction of a penny, and you have billions of dollars at stake. No, don't. We're talking 60%-ish, and it's going to change as time goes on. As volatility changes, those probability numbers change as well. But the way I like to trade this is to stop and say, what was my belief when I put the trade on, and is that belief does it still hold? If crude oil drops down to 72, do I still think it's going to stay above 72 come expiration? Yes or no? That becomes less of a probability question than, gee, are all the reasons I thought crude oil wouldn't drop, are those still valid? If they're not, I close the trade, take my loss, move on. If they are, yeah, I'll sweat it a little bit. Maybe I'll take some of the trade off. I don't like losing money. But if I still think crude oil is going to stay above 72, fine, I'll hang on to the trade, regardless of what the probability says. So the probability number is simply one tool in the tool chest. One of the things I want to show folks before I move on, this is new. Anybody remember, can anybody tell me what's missing from the Analyze page? This is a little like, is this like Jeopardy, or is this like Price is Right or something like that? There's add simulated trades, risk profile, probability analysis, think back, and there used to be another tab here. Does anybody remember what it was? Anyone? Bueller, anyone? I'm not going to ask you about the Smoot-Hawley Act of 1932. It was the Volatility Analysis page. Where the heck did it go? Okay. It was moved to our Widget 360 number. And people are saying, well, gee, what happened when Ameritrade bought Thinkorswim? Well, as it turns out, not a whole lot. The Thinkorswim, we are the active trader division of the company now. We still develop Thinkorswim pretty independently. We put the tools that we want to put on. I'm free to pretty much build this the way I want to. But we're taking some of the nicest little features of Ameritrade and sticking them on here.